IPO we're going to talk about today is Big River Industries Limited, an Australian company focused on building products. You have a lot of comparables on the market, Adelaide, Brighton, ABC, even Boral or Fletcher Building, FBU. The company is focused on hardwood and softwood engineered timber products, which it sells to independent contractors, to construction companies. Founded in 1920, the company has a track record of nearly 100 years and is now seeking to list on the ASX after restructure of the company late last year, seeking to raise 17 million, and the offer price will be $1.46. Big River Industries offers a profitable exposure to demand for construction and for the infrastructure sector, providing these building products for nearly 100 years. Management targets the distribution of a dividend of just over 5% for FY18, and predominantly risks are surrounding the housing market and the exposure to the construction industry. However, consolidation in the industry is a driver, as well as its organic growth potential and continuing on that growth trajectory. We believe that it is valued in line with industry peers, thus offering a very balanced risk and offering an attractive opportunity for those seeking to gain exposure to the domestic construction industry. We're looking at the catalysts for this IPO. We're always trying to find what is going to move the stock and drive it higher over the coming 12 months. Now, the company has a positive growth trajectory over the last few years. Revenue has been growing solidly, and management is predicting just over 200 million for the financial year 17 and a net profit of 5.9 million. So Big River Industries is profitable and predicts sort of mid to single digit growth. So sustaining that trend is a value driver, whilst at the same time consolidation within the industry. You have a lot of small private suppliers and a few complementary businesses sitting there. Management has a strong track record of integrating acquisitions and adding value to the business by doing so. Very selective, there hasn't been too many acquisitions, so anything going forward, any purchase that would add value to the existing business or maybe bring costs down, expand the client reach, would also be a value driver. The third point we're looking at is the diversified customer base. Big River Industries has just over 2,700 clients, and none of the clients actually accounts for a large chunk of the revenue. So it's very diversified as such, which allows management to possibly launch new product verticals and bring them quickly to market. The risks for this IPO are mainly industry related. The company is, as a building construction company, reliant on the housing market. So we are at a point in the cycle which most people call very mature. We had a bull market that has lasted for a few decades, and housing prices are trading at historical highs. So any deteriorating conditions would negatively affect the commercial and the private housing construction market, thus affect the order book of Big Industries. The market is also quite sensitive to interest rate movements, and the company has yet to demonstrate as a publicly listed company how it would operate in various cycles of monetary policy, as this naturally affects the housing market. At the same time, the operations are capital intensive. Big River Industries has a production plant located in Australia, so it does directly compete with overseas suppliers who can potentially bring products quicker and cheaper to market. The distribution arm of the business, as the Big River also distributes products from third-party suppliers, mitigates some of these risks, but it will still be likely subject to an increasing competition.